Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hi, welcome to the COB. I'm Daniela Coulier and it is Monday the 25th of March. Okay, let's have a look at how the market has performed today, because we did have a mixed lead from Wall Street, but the CBO 200 has put in a cracking performance. Currently, looks like it's closing up just over 10 points or 0.7%. And the S&P 500 looks like it's closing up 0.6% to 7,816. And that's up around 46 points. And just worth saying that our market has now rallied 1.9% over the last 5 days, and it is currently just under 0.5% off its 52-week high. But before you all get too excited, it is month-end, quarter end as well this week. Now let's have a look at our 3 themes that came up today. And it was a little bit of a market melt-up going on. As I said, the futures had indicated a positive start to the Australian market, but it was actually much, much firmer and pretty much across the board, with most of the sectors rising higher. We did have a lot of support in the iron ore stocks early on in the day, and it looks as though we are seeing a floor in the iron ore price. Now, it did sell off considerably at the beginning of the year, particularly post-Chinese New Year, but it has been rallying recently, which has helped our big miners. And just worth looking at the Colesworth potential crisis. Of course, crisis is probably an overstatement at this point in time, but nevertheless, you are seeing lots of headlines in the financial press about, well, effectively the politicisation and the populism in the sector, with the Greens and possibly a union calling for a breakup of those two majors. On the contrary side of the coin, a couple of brokers, including Macquarie, just citing that Coles and Woolies are looking like they are offering value at this point in time. Interesting times we're living in. Now let's have a look at some of today's top performers, because we did see it in the REIT sector, particularly Goodman Group. That stock up by over 4%, but positive across the board, with also a good rally there in Dexus and Mirvac. And the second page, we can see a Lend-Lease also rallying, as is Arena, a little bit of profit taking in emerging and national storage, Stockland and Vicinity centres. And let's have a look at information technology, because we did have a positive lead yet again from Nasdaq overnight. Green across the board here, the likes of NextDC, again that thematic of the data centres, which we can pick up in the Goodman Group, up by about 2.7%. And also having a look at the second page there, Life 360 undergoing some profit taking, but it has been a super strong performer. Megaport also in that same vein of data centres, up by over 3%, and Dicker Data and Iris also up, and a little bit of profit taking in Ordinate. And CSL, good to see the healthcare sector back in focus today across the board, buying, particularly in Ansell up 3.5%, but CSL, a big biotech, up by 1.5%, and Cochlear up by 2%. Okay, they were the positive sectors of the day. Now let's check in with some corporate news. An ANZ Group said it agreed to settle a class action suit related to interest charges on personal credit cards, and this is a $57.5 million settlement. And Macquarie Group has denied reports that it's considering taking a large stake in Heathrow Airport, according to City AM. Meanwhile, Bunnings landlord BWP Trust has upped its stake in Newmark Property REIT to 57.5% as its takeover offer for the fellow real estate play nears a close. Fletcher Building, the beleaguered developer, their CEO Ross Taylor will step down at the end of the week after shareholders pushed for a board split last month. And Star Entertainment revealed late last week that Chief Executive Robbie Cook and several of his senior reports will depart as the company braces for the outcome of an inquiry into whether it should keep its Sydney licence. Now it's time to welcome our special guest on Mondays, which of course is Josh Gilbert from eToro. Josh, great to see you. Thank you for joining me.
My pleasure, Danny. How are you?
Very well indeed. Looks like we've got a bit of a market melt-up going on today. Is this just window dressing, or do you think we're seeing some serious buying, Josh?
It's a great start to a Monday, actually, isn't it? Yeah, look, I mean, I think as you mentioned there, we came off a pretty weak lead from Wall Street. But overall, I think what we can take from sort of last week was that, pretty much most central banks came out as dovish. We obviously got that sort of first cut really of some of the most major central banks from obviously the Swiss National Bank. And then I would say what was, a pretty dovish take from the Fed and arguably maybe a slightly more dovish tone coming from the RBA as well. And I think we're seeing that today on the local market. You've got sort of real estate leading, because we're getting closer to sort of those rate cuts. And I think, investors are going to continue to look towards that rotation that we continue to sort of happen into those sort of cheaper, more cyclical assets, such as real estate, such as healthcare, the closer that we're getting to sort of rate cuts. Obviously, for the Fed, that's probably looking like more like June, and for the RBA, we're sort of really looking towards August. So the closer we get to that, the more we're going to continue to see, as I say, that rotation happening. But yeah, a great start to the week, and I do think we are starting to see, buying. We are sort of seeing from our investors that they have got cash at play, and they are starting to sort of put that to use. And if they are looking to put that to use, it is going to be going into equities at the moment.
That's really interesting. So you're seeing inflows into both the Australian and the US market, or is it now starting to come more into Australia, Josh?
Yeah, I mean, look, it's still pretty mixed. And what's sort of really interesting is that we are sort of not seeing a lot of investors maybe planning to sort of rebalance necessarily. We're maybe looking to we're probably seeing clients maybe looking towards sort of those sort of bellwethers, if you like, of sort of the stock markets. We're talking the Magnificent Seven, really, those sort of real names that I think investors can sort of count on. They've always backed, because I think we're getting to a time where maybe as a newer investor, it's maybe slightly difficult. We're talking about that rotation, and it may be moving out of tech, maybe moving into some of those sort of cheaper assets, and especially if you're new to sort of investing, and we obviously seen a huge new retail crowd come to investing in the last 4 years. The idea of maybe selling assets and moving into other assets is maybe quite foreign. So we're not seeing that a huge amount, but I think what we are seeing is maybe a bit more cash being put to use into some of those assets. And I think a lot of that can be looked at in the local market, in the Australian market, given that it has got that sort of larger focus towards those sort of rate sensitive sectors. So I think because we're seeing that move away from tech slightly, investors are kind of pulling back a little bit from the US, and rightly so. And I think diversifying into, emerging markets, Oz, and into Europe as well.
Oh, that's interesting. So what are they liking in emerging markets?
Yeah, it's a great point. I think, a big thing that we're sort of taking away is really in electric vehicles. I think it still continues to be that sort of dominant theme, whether that be in, sort of Taiwan, whether that be in sort of China, wherever we're sort of looking, I think that continues to be sort of the dominant theme. And I think they're really allocating through sort of ETFs. It's a great way to allocate to an emerging market, especially if it's not, a market that you're very familiar with. Obviously, if we're looking at the US or Australia, for example, they're two markets that I think the investors are very comfortable with. They're quite comfortable in sort of buying stocks and sort of sticking with those stocks. Whereas if we go to sort of maybe more emerging markets, when we get into sort of the likes of geopolitical tensions, investors tend to maybe understand less about sort of what's happening from a macro perspective as well. So allocating via the likes of an ETF is what we're seeing as investors are choosing to allocate to those emerging markets.
It's really interesting looking at the Mag 7, because it looks like two of the Mag 7 are kind of, well, Tesla's definitely lost its glory this year, and Apple really seems to be under the pump between the DOJ investigation, slower iPhone sales out of China. Question marks, have they got to the AI party too slowly? Are you seeing any interest in the likes of Tesla? People just saying, yeah, all the bad news is in the share price, and similarly, people taking an interest in Apple?
Yeah, look, I think those are, whenever we get any weakness in those sort of names like that, especially within that Magnificent Seven, we'll certainly see investors looking to take that as an opportunity, especially in names like Tesla. It's, arguably probably the most owned retail stock in sort of global markets. It certainly is the most owned stock by our investors here at eToro. So I think when we get that weakness, investors are sort of focused on what's ahead rather than sort of the short term. And I think there's no denying that we are continuing to see that transition to electric vehicles. And when it comes to Apple, I think maybe a little bit investors are sort of maybe shifting away from Apple just slightly towards those names such as Nvidia and Microsoft that they feel have maybe got into this sort of AI boom a little bit quicker. They've sort of allocated their funds better. I think really we can talk about Microsoft there. Their early investments in AI are clearly paying off with the likes of sort of ChatGPT. And I think investors are looking at Apple to say, okay, you've really not sort of come to the party yet. We had that sort of launch of the Apple Vision Pro, which was sort of this big excitement for sort of maybe a month or so. But again, no one's sort of really talking about that at the moment. So I think investors really want to see more from Apple when it comes to AI. They want to understand that they're not sort of falling behind, especially as you say, when iPhone sales maybe aren't really where we'd expect them to be, especially in other areas as well. If we look at Mac, if we look at iPad, we're not seeing huge growth that we're used to. And I think Apple has been brandished recently as sort of the new Coca-Cola. It's a value stock, it pays a great dividend, but are we really going to continue to see that growth in the future? And I think that's where investors are having those question marks. But that's where I think AI can be really, really imperative for Apple. If they can sort of come out over this next year with clear plans on AI, how they plan to move forward, that's going to be really important. But I think it shows that they're lagging because they're obviously recently sort of speaking to Google to sort of try and work with Gemini. So I do think it does show that they are sort of falling behind. And unless they catch up, I think we'll continue to see their share price come under pressure.
Fantastic, Josh. Well, as always, thank you so much for sharing your Monday afternoon with us here at the COB at ausbiz.
My pleasure, Danny. Have a great week.
Thank you. And let's turn to the stock of the day, which was McGrath, and Luke Larrative from Seneca Financial Solutions and Sean Hickman from Market Matters on the call joined us to discuss it.
Never traded McGrath. Yep. Fortunately, never been invested in it. My gut feel says take the money.
Yep.
And step aside, look elsewhere. There's plenty of good opportunities out there. I'm not a huge fan of going off market. I'd rather have something that's liquid. I can see what it's trading. It's more transparent.
Yep.
That's my personal ethos. Not everyone would agree with that.
It floated with a blaze of glory, didn't it? When was it? About 4 years ago?
4 or 5 years ago. I'd hate to think what the capital depreciation has been over that time.
Yeah.
Your chart doesn't go back that far, but it's going to be one-way traffic.
Yep, exactly.
Like a ski slope.
So take your money and run.
I would, but I haven't researched it in great depth. It's not a stock we've traded or owned.
It's a business that's sort of like stockbroking or these businesses where the goodwill in the company goes up and down the lift every day. It's with the people that work there. It's not so much the brand.
Yep.
And I think as a result, they're generally far better private companies than they are public.
Yeah.
Don't work, whether it's consulting, financial services or legal. I just like a partnership model in a private sort of arrangement, for lack of a better word. And I think, for the Knight Group here, the buyer, they're going to be probably doing really well out of this because it's cheap assets, it's a cheap business, probably decent cash flow. But probably just not the right place for it, the ASX, in my opinion.
Okay, not a lot of love there for McGrath from our two guests. Now let's have a look at market leaders today. And we've got a bit of a mixture. Some of the golds in focus: West African Resources, Ramelius, Goodman Group really on a tear, up another 4% today. Fortescue also very strong, up 3.5%, as was Ansell. And some of the laggards, AIs, that was down 5%. Chalice Mining off by over 4%. Life 360 also. It's been a great performer, but off by 4%, as was Liontown Resources off by about 3.7%, and Bellevue Gold off by about 3%. Let's have a look at some of the small caps and see what's happening there. Archer Materials up almost 28%. KMD Brands, which suffered a bit of a sell down after their update, that was up 12%. Appen also in focus, up 10%. and have a look at some of the small cap laggards. So Electro-Optic Systems really in the firing line, down 17, Jupiter Mines down 10%, Dimerix off almost 8%, and Cash Converters also falling by 6%. Now let's have a look at what is coming up overnight. We have UK retail sales, and FOMC member Bostic will be speaking, so no doubt more colour about what is going on with interest rates and what's happening tomorrow in the day ahead. Consumer sentiment here in Australia, looking at Flight Centre and Atlas Arteria going ex-dividend, and we will also have the likes of the Japanese PPI. Okay, let's just get a final check on today's market, with the CBO 200 trading up by 0.7% or 10 points. So very, very good positive performance, and the likes of the ASX market that traded up by, let's have a quick look, 41 points or 0.5% to 7,811. So we're not too far off those 52-week highs. Well, we'll take it for a happy Monday on this short week. Well, that's it for us here at the COB. Remember to catch up on all the great interviews that are up online. But of course, have a fabulous evening. We'll see you tomorrow morning at 9:45 a.m.